I want to talk specifically about the massive increase in real estate costs that we saw happen after COVID-19. Yeah, and so how are some of these policies that maybe somebody hasn't looked at for 4 or 5 years, if they're not written with a replacement cost, what happens if, let's say, a home gets hit by a tornado, burns down, something like that?
So if you have a policy that is written for actual cash value and say it's $500,000 and your house burns down, and truly to put your house as it was is going to cost you now, because of COVID, supply and demand, inflation, is going to cost you $700,000, you will get $500,000 to build whatever you need.
Starting your route to retirement.
Hello, everybody, and welcome to the Guided Retirement Show. I'm your host, Dean Barber, founder and CEO of Barber Financial Group. Our guest this week is Sarah Askren. She is an insurance agent, and everybody loves to talk about insurance. No, seriously, insurance is risk management. It's part of a well-crafted financial plan, and it doesn't matter if you're just getting started or if you're in your retirement years. Insurance is critical. Sarah's specialty is in property casualty insurance. Sarah's going to join me right now, and we're going to discuss the ins and outs of property casualty insurance and what you should be looking for as the owner of insurance and how to avoid being sold insurance. Sarah Askren, she is a personal risk management development manager with the Miller Group. Sarah, you're going to have to explain what that means to the viewers and listeners here of the Guided Retirement Show, but I'm really excited to have you on the Guided Retirement Show to talk about risk management. So tell our listeners and viewers a little bit about you and what is this personal risk management thing that you call yourself?
Like everybody, I mean, no one really wants to talk about insurance, but that is strictly what risk management is. It's insurance, and it's to protect loved ones, family. And I have done it since 97. I started in the life insurance business and financial planning, just like your firm. And then my passion began to start with life insurance. So I went down selling only life insurance for a while, for a couple different companies. Truly, it took off with my dad. I sold, my first policy was to my dad, and my first claim was my dad. So It was, it's still, that's my passion, life insurance. And I so happened to get into property and casualty here at the Miller Group. And I just realized that it's as important as anything else when it comes to taking care of your family. So I have become, I guess, more passionate about something that I thought I never wanted to do or sell. So,
well, it's interesting, Sarah, because I think a lot of people have a negative connotation when it comes to insurance of any kind. I told you this before we started the podcast today, that nobody buys a life insurance policy hoping to file a claim. And I'm sure that you didn't sell your father a life insurance policy hoping to have him file a claim. But it does definitely illustrate the need for proper risk management and proper insurance. I've got a quick story as an anecdote on your life insurance story. A really, really good friend of mine that I've known for well over 20 years happened to have a lot of clients in New York City. And a lot of his clients worked in the Twin Towers, and he was in the risk management business, primarily life insurance. And he had to deliver almost 40 different death claims after the World Trade Center attacks happened. And so, you know, at that point in time, it became even more real to him how important his role was in people's lives. And I think that there are a lot of people that might be watching us on YouTube or listening to us on a podcast, and they don't like insurance. They don't like insurance salespeople. They think that, all they're trying to do is earn a commission or something like that. But the reality is that insurance plays a crucial role in every person's financial life. And as a financial planning firm, we understand that proper risk management is really at the foundation of a solid financial plan. And that goes for people that are just getting started, coming out of college or whatever, all the way to people that are retired. Yes, the insurance needs change. Yes, the types of insurance that a person should have is going to change, but always having the proper risk management across the board is really, really critical. And so I get it, and I get why that's your passion. And it's a much needed industry, and I like the fact that I can talk to an insurance person who says, I'm doing this because I want to make sure that my clients are protected in the event that something bad happens. I don't like it when I talk to an insurance agent that says, look how much commissions I earned this month, because to me, that's the wrong reason. So can you speak to that? Because you witness a lot of that within your career in the insurance industry.
Oh, I have. And yes, we do make commission. Not all companies are the same, but we do because we have a job. It's kind of like through the Miller Group. It's a service. We're taking care of a need. It's not necessarily, let's make commission. I probably wouldn't necessarily just be working for the Miller Group if that's the case, because it's about what's doing right for the client. And at the end of the day, I still have to put my head down and make sure I did right for the client. And if I was all for the commission, it would definitely not be that way. I do want to make sure the clients are whole at the end of the day if something did happen, or feel that they're whole if they did lose a loved one. I work with a lot of clients, even working with some of your clients there at Barber Financial. If they are perfectly fine in their risk management and they have an agent who's done well, we leave it alone, and we just make sure that they're covered appropriately. So it's kind of nice that I can do that though through the Miller Group.
Yes, sir. You know what that reminds me of? So it's kind of like when you get the right financial planner, when you get the right insurance person, they kind of fall under that same oath that a doctor has, which is first of all to do no harm. Right. And so when you say, hey, if somebody's got the right coverage, we're going to tell them they've got the right coverage. If somebody's got the right investment plan, we're going to tell them you've got the right investment plan. If somebody's got the right relationship with a CPA, we're going to say, you know what, don't change anything because you've done it all right. The idea is for people to get comfortable with the fact that there are people like you, like Barber Financial Group, who are willing to sit down and take the time to analyze your situation and to make sure that it's okay. And if it's okay, they can tell you that it's okay. And it's not about a sales process. It's really about a discovery process. And it's almost like a checkup or a second opinion from a medical professional to say, hey, this is the news that I got from this other doctor. Are they right? Did they miss anything?
Exactly.
And I think that's, when we have our clients come in and we're in the middle now of doing risk management reviews, which we like to do during the first half of every other year. Just another look. Let's take a look at those life insurance policies. Do we still have the right amount? Is it still doing what we want it to do? Let's look at the disability, the long-term care, the health insurance, the Medicare supplements, and guess what? The property casualty, the home, the auto, the liability, all those different things that you look at. For our clients as well. And so I want you to talk about what it is that you're looking for, first of all, and then what are the big mistakes that you see people making in the property casualty side of things?
I typically will look at a client's home, auto, and there's various policies. First of all, to make sure that their dwelling is taken care of to the amount of the replacement cost versus actual cash value. We will do a review of making sure that they are appropriately insured with their autos and not at the minimums. We tend to steer away from the clients having minimums because it's just not enough. Those are state minimums. And then kind of the part working with a wealth manager is the umbrella. In the event something awful happens and you get sued, or your daughter was in a car accident and the bills are outrageous and you hurt someone else, that your net worth isn't tampered with, because financial planners, that's what they're doing. They're trying to grow that nest egg. We're trying to protect it. So that's commonly one mistake, is a lot of clients don't have an umbrella policy to cover their overall risk.
So for people that may not be familiar with what an umbrella policy is, why don't you explain that real quick?
An umbrella policy will basically, you have your auto insurance, your home insurance, and then you have maybe a valuables article policy. But an umbrella policy will cover all those things under your household that, in addition, will pay for the liability of, say, for example, your child was in a car accident with friend XYZ and they end up, in the hospital. Bills are, going up to $500,000, $1 million. The auto insurance covers up to $300,000 per person. Your umbrella policy will kick in and take care of the additional insurance needs that person needs. And so someone gets hurt on your property and, it's above and beyond what your home personal liability covers, the umbrella policy will kick in. And some things that people don't think about is if you're on a board for a nonprofit and say the funds or you've done something that's not appropriate on that board, you could be sued. An umbrella policy will kick in also and help protect you and pay for those bills. So
it's an extra layer of protection, picking up where other policies would leave off.
Correct.
And are those policies expensive?
No. Just for example, an umbrella policy for just a household for $1 million could be $150 to $200
a year.
Yeah. So for that extra $1 million in coverage for personal liability, I'm not going to say cheap, but it's inexpensive.
It is.
Yeah.
And I think that anybody that has any degree of wealth should automatically include an umbrella policy in their property casualty insurances. Mm-hmm. Let's talk about, you talked about the dwelling a little bit ago, the difference between the replacement value and the existing value of the home. I want to talk specifically about the massive increase in real estate costs that we saw happen after COVID-19. Okay. Yeah. And so how are some of these policies that maybe somebody hasn't looked at for 4 or 5 years, if they're not written with a replacement cost, what happens if, let's say, a home gets hit by a tornado, burns down, something like that?
So if you have a policy that is written for actual cash value and say it's $500,000 and your house burns down, and truly to put your house as it was is going to cost you now because of COVID, supply and demand, inflation is going to cost you $700,000, you will get $500,000 to build whatever you need. We will look. If you haven't looked at your policies for even just a year, I'll be honest, it's already gone up again because of COVID. You're at a disadvantage. And you will have to, instead of your deductible, maybe at $2,500 or $5,000, $10,000, you're going to have to pay for more for your house because the money's not there. But we do make sure our clients do replacement cost. And that means we will do a replacement cost estimator, taking in the fact that inflation, things that are in your house that are unique materials, so forth. And of course, what's gone on in the last couple of years has played a factor in that also. So replacement cost, for example, if you're with a company like a high net worth company like Chubb, and your house is, the dwelling is $750,000, and it's going to cost, just because in the last year it's gone up, and it's going to cost $850,000. Chubb will. There are companies out there who will pay the $850,000 for your house to be covered.
What do you see most typically? What type of policy do you see most typically when somebody's coming to you and saying, "Hey, I want to make sure I'm covered properly"? Do you typically see replacement value, or do you typically see cash value?
I have been seeing replacement cost on there, typically from most carriers. Now, is the dwelling correct? Probably not. It's a little low on a lot of the policies.
How would a person know that?
They wouldn't until they talk to their agent and have a replacement cost estimated out for them, instead of, because you can have a market value, your house is worth $1 million, but once you do the replacement cost, it could be $1.2 million with today's dollars. So people kind of get caught off like my house is only worth $1 million. But in today's dollars, and also with the cost of goods now, with everything going on, it's gone up to replace that house.
And so when that happens, Sarah, do you then, does the insurance company then say, okay, the replacement value has increased, so now we need to increase your premium because the replacement value has increased? And do they do that automatically? Or is that something that you have to get with your agent once a year and say, hey, let's review this replacement cost? How does that work?
Typically with the high net worth carriers, it's automatically going to go up. They will do a replacement cost estimate on it each and every year. There are times that as an agent, I will look at it and review with the client. And if it's a little too high, we do work with the insurance carriers to see what we can do. But they typically at renewal time, it will go up and the premium does go up automatically. So, but yeah, most of them do that.
If a person were to look at their homeowner's declaration page and they wanted to know if they have replacement cost and if it's done properly, or if they've got an actual cash value, what would they look for?
On their policy for dwelling A, it would say replacement cost. And some of the policies will have an endorsement on their policy that says replacement cost at 125%. So they'll have the replacement cost that stays the same on dwelling A, say for example, 500,000, but then it will go up additional 25% for that home because they bought the endorsement.
Okay. So let's compare that then to the automobile market right now, because we've seen, as of the date that you and I are recording this podcast, we've seen used vehicle prices increase by 35% over the last 12 months. So I assume that a lot of times people will do a replacement value on their used vehicle as well. And now their used vehicle's worth 35% more than what it was a year ago, or that's what you're going to pay for it. How's the insurance company looking at that? How are they treating that today? And what are they doing in order to protect themselves?
We have seen a lot of the vehicles go up in price for the agreed value for their vehicle. So, last year their car was $60,000 and now it's $62,000. We don't see a huge increase like we do on the dwellings for the homes, but we do see it. How the insurance carriers are protecting themselves, I think it's us as agents being the eyes and ears for the insurance carriers are needing to talk to the clients a little bit differently and educating them to increase their deductibles, cut the claims down, meaning how to protect their cars, their homes, so those claims don't happen, to keep their premiums in other areas down. So I think agents have to be more proactive to help the insurance carriers.
How competitive is that market, Sarah? I mean, you can't turn on any sporting event without seeing multiple commercials, from the little Geico dude running around to the Liberty commercial. I mean, it's almost like, these people are spending millions of dollars on advertising. Is the market really that competitive? And can you really save 15% or 10% or 15 minutes, however the Geico deal goes? Is that stuff real, or is this just marketing gimmick?
It's probably real to some extent. Your Geico agent's not going to call because there is no agent, and it's with Mahomes, with State Farm, stuff like that. It is very competitive, and I think when it comes down to it, it still is probably the agent or the agency and helping the client understand and what your insurance is, how does it work for you, and what can we do for you? Yeah, and staying in front of the client.
You see people get with a captive agency like a State Farm or like an American Family or something like that, and you'll see somebody get with that captive agency and they will stay with that same agent and that agency for 10, 15, 20 years. What are they missing that the rest of the industry has? Or is it really true that everybody's going to get the Mahomes discount and, it's going to be the best for everybody?
I do love those commercials. What are they missing out? Probably competitive rates at some point, but, Pat, State Farm and American Family and those on the back, I don't sell for them, but they do keep their clients pretty loyal, and they do sometimes have markets other insurance carriers can't sell in or want to. They're missing out probably on the options to have their policies looked at every year. I'm a big fan of trying to keep a client with one company and trying my best not to move them if at all possible, because I do believe in loyalty to an insurance carrier. I have lots of friends who sell State Farm and American Family, and they do well.
I mean, I have friends and acquaintances that work for a lot of the different insurance companies, and it's interesting because they all think that theirs is the best. And we know that there's not one company that's going to be the best for everybody. So I guess that's where a person, if you're working with a captive, if you want to shop, you've got to actually go out and do it. You've got to find yourself an independent agent like you are, and the Miller Group is, to really go out and shop that against other carriers. But at what point does it make sense to do that on a periodic basis where you're going to not necessarily question your captive agent, but you're just doing your due diligence?
I think everybody gets caught up, I can get premiums or lower premiums somewhere else. And eventually that company has to also, the company you just jumped to has to find a way to make money too. So they will eventually increase premiums too. Then you jump back. I think it's very wise on a client's annual review to ask the questions and do their own, like you said, due diligence. They should be wise enough to ask the questions. But
you do your reviews, what, every year, every other year? How often are you reviewing your clients' policies?
We do them every year, and the clients have a choice if they want to, have in person or on the phone. And we will remarket them if we feel their rates went up and there's really no rhyme or reason why they went up. And like this year with 2021 rates in Missouri, just for example, I mean, there was 2 rate increases with 2 different carriers I use, and clients were not happy. So we go remarket them to another carrier. And what they don't understand is that other carrier's rates are high already. So we keep them where they're at. We just possibly, change their deductible or make sure everything's in line. But also insureds understand things are happening right now. Not everything's really normal right now. But when someone's rates go up 30% and they've had no claims and nothing different in their household, they want to move. So we try to keep them where they're at, or sometimes they go elsewhere.
Yeah. So it's interesting, in the property casualty world, I think people never go out and buy a homeowner's policy or an automobile policy wanting to file a claim. But I also know that some carriers have a better history of paying claims than other carriers. Some carriers may want to give a little bit of a fight or make you jump through some extra hoops. So what do you do in that scenario? Do you know that about the carriers, and do you choose not to use the carriers that are more finicky on the back end of that thing when a claim does need to be filed? Or is that just the nature of the industry itself?
I wouldn't say it's necessarily the nature in the industry. I think that's a perception on the industry. There are carriers, we call them, we consider them high net worth carriers, tend to pay claims a little quicker without the details and out of the pettiness of, turning receipts in and so forth. They do a lot of the back end work with researching how much stuff costs. So the clients don't have to do it. There's usually a little premium, and it costs a little bit more to use those companies. We have insurance carriers we use. You wouldn't think they would pay claims right away, but they're the best at paying claims. For example, I sell Progressive, and their claim system's pretty good. I'll be honest. So, and we use Progressive for a lot of like motorcycles and autos for certain individuals.
So I had a scenario happen to me where it's like, there was a few years back in the Kansas City area, there was a hailstorm, and we get those occasionally. And I didn't think a whole lot about it until the neighborhood right next to me, people started replacing their roofs. And I'm like, well, I wonder if we actually got any roof damage during that hailstorm. So we had somebody come out do an inspection of the roof, and sure enough, we had extensive hail damage. So we go to file a claim for a roof replacement, and the on the application, the date of the claim, we put the date of the claim as of the date that we filed it. And I think that was wrong, because then they said, well, they did a thing, and they said, well, there was no incidents in your area during that time, so your claim's denied, right? And so it took us over a year to get the underwriters and to get the insurance company to actually allow us to refile that claim based on the date of the actual occurrence. So we went for really, I think it was close to a year before we got our roof replaced. And so it was just like run around. And again, I don't know, that gave me a bad.
You didn't have me as an agent. No.
I did not. I did not. But it's like, come on, obviously we wrote the wrong date down. Here's the date of the incident, right? Let's just get the thing fixed. But it wasn't that simple.
Huh. Yeah, it is the date of the occurrence.
Yeah, and we put the date that we filed the claim on the form. And our agent obviously at that time didn't say, "Oh no, you don't put that date there. You need to put the other date there."
Should have been a quick fix, though.
Yeah, should have been. Yeah, but it wasn't. Bottom line is, I think, Sarah, what you do with the Miller Group, what you do to help our clients protect themselves is critical. And I'd love for everybody out there to know that you need to be getting your insurances reviewed. It doesn't matter if it's your health insurance, your Medicare supplements. It doesn't matter if it's your property casualty. It doesn't matter if it's your life, your long-term care. All of those things deserve a review at least every other year at a minimum, just as much as your investments deserve a review, just as much as your tax situation deserves a review, just as much as your estate plan deserves a review. It's all part of the comprehensive financial plan. But I think people forget about it, that I got the policy, I'm good, right? I don't want to talk about it, because last time I talked about it, I had to sit down and talk for 2 hours about insurance, and I'd rather go to the dentist and that type of a thing. So why should
I would rather talk insurance and not dentist.
I would too. I hate the dentist, but don't tell my dentist I said that. Sarah, anything else that you'd like to share with our listeners or viewers on the importance of the proper property casualty?
I would encourage everybody, first of all, do talk to your insurance agent. Ask as many questions. No questions is a stupid question. And I mean, it's making sure you're taken care of. I do want to mention, especially with COVID happening, look into travel insurance if you do travel. It doesn't cost a lot. We are starting to really help clients with that and understand, because if you go across seas, a lot of our insurance, like your HMO and PPO, they don't cover places over there. And then you have to make a emergency flight back, and all that stuff can get paid for if you're properly insured under travel insurance. And a couple other things is, we did talk about the umbrella policy. Ask your agent about umbrella policy, even if it's a $1 million policy. And that's to protect yourself as a whole. It's inexpensive, and just ask. And last is probably, we talked about claims, and the worst claims I've had come through since I've been at the Miller Group has been water claims. It is, especially with COVID, supply and demand, but just fixing a water claim is horrific. So it's not that expensive, but a water shutoff valve on your home is well worth it. And that's just a tidbit, talk to your plumber and have it installed. So
water shutoff valve, sump pump, same thing?
No,
but that would help too.
Yeah, sump pump. But it's just protection. And I guess this is why I also said yes to being on the podcast. I do have a passion for insurance, but I also care about people. Insurance is there to protect everybody in catastrophe, and when you have a loss, a complete loss, but also and they'll take care of you, but also take care of your stuff. Protect your home the way you should do, protect your cars. I get my vents checked all the time, heating and cooling vents, just so everything's running right. I do the sub pump, water shut off valve, but also maybe have a plumber come look at your stuff, just once a year, every other year or something, just little things. And it helps out. So,
well, Sarah, great. I really appreciate you taking a few minutes to join us here on the Guided Retirement Show. And of course, many people might be thinking, what in the world does insurance have to do with retirement? But it's part of your risk management, and it needs to be discussed. And you need to feel confident that you can discuss it in a way where you don't feel like somebody's selling you insurance. So that to me is the key. You need to look at your insurance agent as a trusted advisor, someone that knows what's going on and somebody that really cares and is always doing the right thing. So Sarah, that's you. That's what you do there at the Miller Group. And I appreciate you joining us on the Guided Retirement Show.
Thank you.
Thanks so much for joining us on the Guided Retirement Show and my conversation with Sarah Askren. If you want to ask Sarah some questions, go to a link in the show notes where you'll find a link to their homepage. Don't forget to subscribe and share with your friends. If you're watching us on YouTube, feel free to engage in a conversation regarding our discussions. Thanks again for listening to the Guided Retirement Show.
Starting your route to retirement.